Jeff Bezos is worth over $170 billion, yet he rents his $23 million mansion. Mark Zuckerberg could buy a small country, but he rents office space for $400 million a year. And Warren Buffett, the world's greatest investor, still lives in the same house he bought back in 1958. But his companies, they rent almost everything. This seems completely backward, right? Why would the richest people on the planet choose to pay rent when they could easily buy whatever they want? Are they just making terrible financial decisions? The truth is, they're playing a completely different game than most of us. While we're trying to own assets, they're optimizing for something far more valuable: liquid capital and maximum flexibility. They understand that in today's economy, ownership can actually make you poorer. This isn't just about real estate. The rent versus buy decision reveals a fundamental difference in how billionaires think about money, assets, and wealth itself. Let me show you exactly why the ultra-wealthy rent, how this strategy multiplies their fortune, and when you might want to do the same. First, billionaires think in terms of opportunity cost. When Bezos rents a $23 million house, he's not wasting money. He's keeping $23 million liquid, ready to invest in higher return opportunities. While he pays about $2 million a year in rent, that same $23 million invested in Amazon stock could have generated over $100 million in returns. The math is simple. If your investments can return 15% annually, but your mortgage costs 6%, you're losing 9% by buying instead of renting and investing the difference. On a multi-million-dollar property, that's millions in lost returns every single year. Second, they understand that ownership comes with a lot of hidden costs. Property taxes, maintenance, insurance, these can easily add up to 3 to 5% of the property's value annually. A $10 million property could cost $500,000 a year just to maintain, and that's before you even consider the opportunity cost of having all that capital tied up. Third, billionaires value flexibility above all else. When Zuckerberg's company needs to expand, downsize, or relocate to a new tech hub, renting allows for instant adaptation. Ownership creates what's called anchor bias, where you start making decisions based on what you own, not what's actually best for your business. But here's a part most people miss: taxes. Billionaires rent because they can often deduct the expense. That $400 million in office rent? It's a massive tax write-off that reduces taxable income. Buying a building creates an asset that appreciates slowly, but renting creates immediate tax savings. Let's look at a real-world example. Meet Sarah, a tech CEO worth $50 million. She's looking at a $5 million house. She could buy it with cash, or she could rent a similar house for $25,000 a month and invest that $5 million back into her company. Sarah chooses to rent. Her company is growing at 40% annually. That $5 million investment becomes $7 million in just 1 year. After paying $300,000 in rent, she's still $1.7 million ahead. In 5 years, her investment is worth nearly $25 million, while the house she considered buying might only be worth $6 million. Meanwhile, her neighbor bought a $5 million house with a mortgage. He's paying $30,000 a month in mortgage, taxes, and maintenance. After 5 years, he's built up some equity, but he missed out on the explosive growth Sarah achieved. Here's the crazy part. The neighbor feels successful because he owns real estate. Sarah feels successful because she owns cash-flowing businesses. They have two completely different definitions of wealth. This is the wealth acceleration secret of the billionaire mindset. Liquid capital can be deployed instantly into the highest return opportunities, like a growing business. Real estate ties up your money for years and typically generates much lower returns. $1 in real estate might grow 3 to 7% a year. That same dollar in a high-growth business could return 20, 30, or even 50%. The choice becomes obvious. It goes even deeper. Billionaires know that true wealth comes from owning systems that generate cash flow, not assets that require cash flow. They'd rather own businesses that pay rent than own properties that collect it. The ultra-wealthy also understand economic cycles. When markets crash, they have cash on hand to buy assets at huge discounts. Property owners are often trapped, unable to sell their illiquid assets. Society teaches us that ownership equals success. We're programmed to buy houses and cars to feel wealthy. But billionaires understand that feeling wealthy and being wealthy are often opposites. So what can you do with this information? First, calculate your own opportunity cost. If you can earn more by investing your money than what you'd pay in rent, consider staying liquid. Second, think like a business owner. Ask yourself, does this purchase generate cash flow or does it consume it? If it consumes cash, renting might be the smarter play. And third, optimize for flexibility. In a rapidly changing world, the ability to adapt quickly is often worth more than the stability of ownership. Billionaires rent because they're playing a different game. One optimized for wealth, not just ownership. Sometimes the best way to get rich is to stop trying to look rich. Thanks for watching, and don't forget to subscribe for more insights.